What's up, guys? Welcome back to the channel. So today I'm going to be going over a smaller listing that we have in the Midwest. This deal is 31 lots, city utilities, all direct billed to the tenants, majority lot rents, and it's overall just a clean deal that I think a lot of you are going to like. So stick around, we'll get to it. So before we get going, if you guys haven't already, make sure to join my private Facebook group, Mobile Home Park Investing with Armand Violi. Over there, I'm going to be posting a lot of these deals and exclusive access to off-market deals, tips and tricks as an insider in the business, and it'll just be a good way to network with other investors in the space. So in today's video, I'm going over a new listing we just brought out. It's a smaller deal. It's called Whitewater Estates. It's located in Augusta, Kansas, that is in the Wichita, Kansas MSA. Some quick specifics on it. It's 31 lots, 27 of them are occupied. It's a really small, easy, clean deal because it's city utilities, all direct billed to the tenants. All of the occupied lots right now are actually lot renters. There is one vacant park on home. If you do want to take a look at this packet, there's 17 pages worth of useful information in here, our underwriting, then there's also the rent rolls and the P&Ls that we have in this property. They're all going to be located in the description below, or if you go to our website, otherstreetadvisors.com/current listings. So right here I have the OM. I just want to go over a lot of the basics on this property and give you guys an overview of the financials of this park. Like I was saying, Whitewater Estates, it's located in Augusta, Kansas. That's in the Wichita, Kansas MSA. Utilities direct billed. There's immediate upside in rents, immediate upside in occupancy. Another thing, the roads are being patched and sealed. That just got completed last month. And one thing that's important to look for when you're considering whether to buy a property or not is the demographics in an area. Two major things are going to be the average household income, and then the most important in my mind is the average home price. The reason being is if the average home price in the area is less than $150,000, you're getting into this zone where there might not be that huge of a demand for affordable housing. When you're going below $150,000 in home price, especially if you get below $100,000, the cost of owning a home between the payments and everything is going to be about the same or only a little bit more than living in a mobile home. So there's not really that strong inherent demand for mobile home parks. If the average household income is also low, then that actually hurts your ability to, one, improve the park and raise your rents, and two, there's probably not going to be a ton of growth in the area. Looking at this park, what you have here is an average household income of $74,000. That's above the $50,000 mark, which is good. And then your average home value is $174,000. This is all within 10 miles of this park. So these are actually really strong demographics because it is in a major MSA. Moving down to the financials of the park, as you can see here, there's 31 lots total. 27 of them are occupied. The average site rent is $190 a month. You have $7,200 in extra income because a few of the homes are on a rent-to-own contract. And after this other miscellaneous income, you have a total gross income of $70,752. This is the current rent roll with adjusted expenses as of 2020. Just to show you guys how easy of a park this is to run, with it being majority lot rents and city utilities direct billed, the expense ratio is lower than most other parks. A lot of times in mobile home parks, you expect it to be around 40 to 50% depending on the type of park. This being a smaller deal and also a very clean deal and easy to manage, our expense ratio on this is at 31%. With those expenses backed out, that leaves you a net operating income of $48,551. Some financing assumptions we made, you're probably going to do a 75% loan to value ratio. That means you're going to put a 25% down payment on $625,000. We're also assuming it's going to be a 4.5% interest rate. You can get lower, especially if you have a larger park. Amortization period probably going to be around 20 years. I wouldn't expect the bank to go 25 or 30 years on a deal like this. Interest and debt payment and everything, you're going to be at $35,587. That puts you at a debt service coverage ratio of 1.36x. Your cash on cash returns on this property based on the current rent roll is going to be 8.3%. A few assumptions we made that someone's going to easily be able to come in here and do is it's 31 lots, 27 are occupied. You're going to fill the remaining 4 vacant lots. And then on top of that, you're also going to bump up the rents $10 in year one. So that's going to give you a total site rent of $200. That brings your cash on cash return to 11.48%. So what that is, in year one of buying this park that's already easy to manage, you're going to be double-digit returns on your cash. Year 2, year 3, year 4, we raised the rents another $10 to $210, another $10 to $220. Year 2, you got a 15.31% cash on cash return, 16.49%, 17.71%. These are crazy returns for a relatively cheap and easy to manage investment. As far as mobile home parks go, I know a lot of you guys that go to the boot camps, they always tell you all lot rents, city utilities, direct build. This pretty much checks all the boxes, strong MSA. So I think this is going to be a really good deal for a lot of you guys. We've had it out there for about a week. It is moving quick. We've already received one offer on it that we're reviewing right now with the seller. We expect to get this under contract relatively quick. It is a very sellable deal. I hope you guys like this video. Again, this is called Whitewater Estates. If you want to access this pack and all the financials, click the link below.
Fly me to the moon, let me play among the stars.